everyone, this is Jean, a researcher at Dxpert, and today we'll be decoding the impact of TSMC earnings. TSMC surprised us with a performance that exceeded expectations in their latest earnings report. The semiconductor specialist recorded earnings per share of $1.44, surpassing the consensus estimate of $1.39, despite a 19.3% year-over-year decline. TSMC's sales stood at $19.62 billion, a 1.5% decrease from the previous year but closely aligned with the $19.68 billion target. TSMC reported a 19% decline in net profit, reaching 238.7 new Taiwan dollars, down from the strong performance in the same period the previous year. Despite the decrease, the profit exceeded the 226.4 billion new Taiwan dollars LSEG Smart estimate, which places great emphasis on forecasts from consistently accurate analysts. As a pure-play foundry, TSMC focuses on manufacturing chips for other companies without designing or selling them directly to end users. In the fourth quarter, advanced technologies like the 3nm, 5nm, and 7nm chips contributed significantly, constituting 67% of TSMC's wafer revenue. In particular, the 3nm technology, which strongly supported TSMC's fourth quarter business, as quoted from Wendell Huang, the CFO of TSMC. Major customers of TSMC include Apple, Nvidia, and AMD, all listed on NASDAQ 100 and S&P 500. Following TSMC's positive earnings announcement, stock prices rose, boosting the outlook for tech earnings. The NASDAQ Composite and S&P 500 increased 1.4% and 0.9% respectively. This surge was led by strong performances in chip and mega-cap stocks. TSMC stock soared nearly 10%, and other chip manufacturers like AMD experienced a similar positive trend. Microsoft and Meta platforms also contributed to the market strength, and other chip manufacturers like AMD experienced a similar positive trend. Microsoft and Meta platforms also contributed to the market strength. Indeed, TSMC's optimistic stance for this latest quarter is one of the driving forces for this new bullish momentum, and it might be a sign of better things coming from these three tech trifectas, especially Microsoft, now the world's most valuable publicly traded company. Microsoft's lead in commercializing AI, evident in initiatives like integrating Copilot, is driving positive analyst sentiment. Meta, known for social media, excels in AI with products like Ray-Ban glasses and proprietary Llama models. Nvidia's market dominance, particularly with an 80% share in the AI chip market, underscores its crucial role in AI development. This collective strength hints at a promising future for these tech giants. Looking ahead, TSMC's revenue is projected to grow over 20% in the current year, as indicated by Citigroup's report, which reiterated a buy rating and raised the target price from 720 new Taiwan dollars to 740 new Taiwan dollars. TSMC anticipates substantial growth in its HPC business, with AI chips making up a significant portion of sales by 2027. The long-term demand for AI, coupled by the revival of the smartphone market, although not in the short term, contributes to the TSMC's positive outlook. The rise in demand driven by generative AI such as ChatGPT benefits TSMC. As a leading technology provider, TSMC is the preferred manufacturer for companies like Nvidia designing advanced AI chips. All in all, the semiconductor industry faced challenges in 2023 due to an inventory buildup, but signs suggest a turnaround. TSMC expects capital expenditure to remain between $28 billion and $32 billion this year. In the coming week, we'll delve into a broader semiconductor industry, exploring its main drivers. If you found this video insightful, please subscribe, share, and like. By the way, you can also find NASDAQ 100 and S&P 500 on the Dual Prime platform using the tickers NAS 100.S and SP 500.S. See you next week.